Hey everyone, there's nothing more important in our life than our family. Hence, ensuring a financial security to our family is our topmost priority. That's where one of the most important steps in financial planning is taking a term plan, which is the purest form of life insurance. So that if anything happens to you, then your wife can still live a dignified life. Your kids can still get the best education. And your family doesn't have to depend upon others for financial support. Trust me, knowing that your family will be financially secure even if you are not there to support them brings a huge peace of mind. Hence, today I want to discuss 8 mistakes that you must avoid while buying a term plan. So, mistake number 1 is delaying the term plan. A lot of people underestimate the risk associated with life uncertainties. They believe that nothing unfortunate can happen to them, or they are young and healthy, so they don't need to take a term plan immediately. Moreover, a lot of people perceive term plan as an additional financial burden. After all, you have to pay a fixed premium every year. Then another problem is many people have limited disposable income and they already have short-term financial goals or immediate expenses such as home loan, educational loan, or daily living expenses. As a result, the long-term financial protection gets pushed aside. Friends, I've seen many cases personally where a lack of term plan has shattered the families. While loss of your loved one is already a huge emotional breakdown, on top of that, financial struggle can really make things worse. I'm sure we all know that life is really uncertain. So don't underestimate the importance of a term plan and make sure that if you don't have a term plan cover, then opt for a right term plan as soon as possible. The most important aspect is that the earlier you take a term plan in your life, the lesser would be your premium, because term plan premium is directly linked to your age. When you are young and disease free, you can lock in lower premium rates for the entire policy duration. Now this is very important. Delaying the purchase of term plan can increase your premium amount. For example, today you might think that a term plan premium of say 12,000-15,000 a year is a big amount, but 10-15 years down the line, 10-15,000 per year premium would be peanuts for you. And if you take the right plan at right age, down the line you will thank yourself for taking this decision. Then second mistake is opting for inadequate term plan coverage amount. Only taking a term plan is not enough. You need to ensure that you take a right term plan coverage amount. That's where a lot of people end up taking inadequate term plan coverage. For example, let's say your family has a monthly expense of 50,000. Then a term plan cover of 1 crore would be sufficient at current level. So if your family keep that money in FD and expect 5-6% interest, then they would earn 5-6 lakh per year as interest, and that would be good enough to take care of their expenses. But let's not forget inflation. Today 1 crore term plan might look like a big amount, but 10 years down the line, assuming an inflation rate of 5%, 1 crore would be worth only 61 lakh. And 20 years down the line, 1 crore would be worth only 37 lakh. So inflation is reducing the value of your money. In that case, if you take a cover of 2 crore, then at 5-6% interest, you will get 10-12 lakh a year. That should be good enough for your family. But here you also need to consider all your financial obligation. For instance, let's say you take a term plan cover of 1 crore, but what if you have a home loan and car loan of 50 lakh? In case of an unfortunate event, out of 1 crore, 50 lakh would be used to pay for your home and car loan, and your family would be left with 50 lakh. The question is, will 50 lakh be enough to cover your family daily expenses and other financial goals like your children, education and marriage? So before finalizing the term plan coverage, make sure that you take into account your family's expected future expenses and consider all your financial obligations such as mortgages, loans and any other due payment. Then third mistake is ignoring the riders. Every term plan offers multiple riders that are add-on to your base term plan to make it more comprehensive and suitable for your needs. For example, you have life stage benefit where the insurer will offer you the option to increase your cover by a certain amount during major life event. For instance, when you get married and you have kids. Then you have waiver of premium where if something happens to you and you become seriously injured or physically impaired, then you might not be able to pay the premium. Now, if you opt for this waiver of premium rider, it will allow you to keep the policy and not worry about premiums if you get disabled. Next is critical illness rider, where life insurer will pay a certain amount for critical illnesses like your cancer or chronic lung disease. Then you have accidental death benefit, where a family member would get some extra money and some extra financial protection in case of an accidental death. So it is very important to understand the various riders available with term plan. But I know that it is not easy to understand the term plan features and select what is best for you. Mainly because the term plan offer documents are too lengthy and complicated. And that's where you can take help from Ditto team that can understand your requirement and simplify the term plan details for you in layman's language. Accordingly, they help you shortlist the right term plan for your family. They even review your existing term plan and guide you if it is right for you or not. You can set up a free 30-minute call with Ditto team, and the best part is that they don't push insurance policies. Because one of the biggest problems with insurance sector is spam calls and insurance mis-selling. Personally, I can vouch for Ditto team that is genuinely trying to solve this problem of insurance mis-selling and spam calling. See, ultimately it is your call whether you want to take a term plan from Ditto or not. But I would strongly recommend at least setting up a free call with their team. A, because it is free, so it is not costing you anything. B, term plan is extremely important and equally complicated. And C, every person has a different requirement. So you want to make sure that you have a term plan that is right for you with all the required features. In case you have a prior experience with Ditto team, do let me know in the comments. I also have provided the link to get the 30-minute free call appointment in the pinned comment. Now, fourth mistake people make is opting for a whole life cover. Another important decision that you need to take while opting for a term plan is till what duration you should take a term plan. That's where a lot of people make the mistake of opting for whole life cover that covers you with life insurance till 99 to 100 years of life. Now it seems like a good proposition on the face of it. But let's say you pass away by the time you are 95. At that point, your children would have grown up and settled in their life, and your family would have enough finances to sustain their living. Would a whole life plan be useful then? Probably not. Moreover, please note that the premium for whole life might be very high. Especially after the age of 70 years, term plan premiums shoot up significantly. So it's probably not worth taking a whole life cover. Ideally, you should take a term plan till 60-65 years because chances are high that your children would need a financial help till that time, and then eventually they will become independent. And you will have enough money by 60-65 for your wife to live a financially comfortable life. So if you have to choose between two options, so one is a term plan of 1 crore for 75 years and second is term plan of 1.5 crore for 65 years, then let's say both have same premium, then please select option 2 that will give you a higher term plan coverage. Then fifth mistake is dependency on company provided term plan. Nowadays, many private companies in India offer a term plan to their employee. And I'm sure a lot of you watching this video would have an employer provided term plan. While employer provided term plan is a good benefit, there are few issues with them. First is, since it is a group term plan for entire organization, it generally lacks important features that you must have in your term plan. Second, when you switch your job, your existing term plan is discontinued. So you need to ensure that your next employer provide you with the term plan. Moreover, if there is a gap in joining the next organization, you'll have a risk of not having a term plan during that period. So if anything happens during that period, your family won't be covered with term plan. So I believe it is always better to take a separate individual term plan. Then sixth mistake while taking a term plan is shortlisting the cheapest term plan. While shortlisting a term plan, a lot of people focus on one key parameter, that is premium amount. That's where many people make the mistake of shortlisting the term plan with lowest premium. Friends, remember that when it comes to term plan, cheapest is not the best option. Because you want to make sure that if anything happens to you in the future, your family should get the term plan. There is no point paying a low premium if your family doesn't get the financial coverage when they really need it. So you must ensure that the term plan insurer should have a high claim settlement ratio. For example, if a company receives 100 death claims, out of which 98 were cleared, the claim settlement ratio is 98%. The rest 2% might be attributed to rejected claims or pending claims. So make sure that your insurance company has a high claim settlement ratio. Anything about 97% is good. By the way, you can find this claim settlement information in IRDAI's annual report. Then second important ratio you must look is amount settlement ratio, which is calculated as amount paid out in claims divided by total value of claims filed. For example, in a year, let's say 10 lakh crore worth of claims were made and 8 lakh crore worth of claims were paid out. So the ASR, that is amount settlement ratio, would be 80%. Some insurers pay out the smaller claims while declining to pay out few higher value claims in a bid to improve the claim settlement ratio. So you'll need to look at total amount settled as a percentage of total value claimed. A number above 90% should be good enough. You can again get this detail in IRDAI's annual report. Now, seventh mistake is not informing the nominee about the term plan. I've personally seen cases where the families have struggled to claim the term plan amount after the death of breadwinner in the family because they had no clue about the details of term plan. A lot of people make this mistake of taking a term plan but not informing their nominee about the details of the term plan. So you must ensure that you fill right nominee detail at the time of taking the term plan, and your nominee should clearly know about the term plan details. In case you already have a term plan and you are not sure about the nominee, do check your term plan details and update the nominee information. Then final eighth mistake is not disclosing relevant information. There have been many cases where the term plan insurance claim got rejected just because the policyholder did not disclose the right information at the time of filling the insurance form or filled the incorrect detail. And later, they blame insurance companies. Please understand that insurance companies require accurate information to assess your risk involved and determine the appropriate premium for your policy. Any failure to disclose important detail or providing false information could have serious consequences such as denial of claim or cancellation of policy. Some people also simply sign the document and let the insurance agent fill the necessary detail. In that case, there are chances of missing important details or filling wrong information. Please make sure that the right details are filled in your presence, because your form will play an important role in deciding whether your claim will get approved or rejected. So in this video, we discussed 8 mistakes to avoid while buying a term plan. If I summarize, the mistake include delaying the term plan, opting for inadequate term plan coverage amount, then ignoring the riders, then opting for whole life cover, then dependency on company provided term plan, then shortlisting the cheapest term plan, then not informing the nominee about the term plan, and final is not disclosing relevant information. Now I receive a lot of requests for best term plan, but trust me, there's no single best term plan. It all depends upon your individual requirement and financial goals. And that's where you can reach out to Ditto team for a free 30-minute call where their advisor can help you select the right term plan for your family. So this is it for this video. I hope you'll find this video informative. In that case, do share this video within your circle. I'll see you in the next video. Till then, take care.